liquidity ratio, account activity ratio, turnover ratio, liquidity ratio. Current ratio, liquid ratio, acid test ratio, quick ratio, solvency ratio. Debt to equity ratio, total asset to debt ratio, propriety ratio, interest coverage ratio, debt to capital employed ratio. If you have any doubt, you can comment. Activity ratio means turnover ratio. Last formula, profitability ratio, gross profit ratio, operating profit ratio, net profit ratio, return on investment on return on capital employed. Gross profit ratio, gross profit by revenue from operation into 100. Gross profit equal to revenue from operation minus cost of revenue from operation. Video will coming soon. Full explanation video, explain video. Operating ratio, cost of revenue from operation plus operating expense divided by revenue from operation into 100, या फिर operating cost divided by revenue from operation into 100. Revenue from operation means net sales plus direct expense minus closing inventory excluding stores, spares, loose tools. Cost of material consumed plus purchase of stock in trade, changes in inventories, finished goods. Here you can calculate cost of revenue from operation. Operating profit ratio. Operating profit ratio. Net profit before tax plus non-operating expense minus non-operating income minus non-operating income, expense minus income, non-operating. Gross profit, other operating income minus other operating expense. Non-profit expense, non-profit income, net profit ratio, net profit before after tax divided by revenue from operation into 100. Net profit after tax, gross profit plus other income minus indirect tax minus tax. In return on investment or return on capital employed. Return on investment or return on capital employed equal to profit before interest, tax and dividend into 100 by capital employed. Tax divided by capital employed into 100. Capital employed, liability side approach and asset side approach. Liability side approach, share capital plus reserves and surplus. Asset side approach, non-current assets plus working capital. Working capital is very important, so working capital equal to current assets minus current liabilities. Very important note, assume that all non-current investment are trade investment. Interest on non-trade investments should be deducted from profit from profit before interest, tax, dividend. If you have any problem, you can comment. Inventory turnover ratio. Cost of revenue from operation by average inventory. Average inventory equal to opening inventory plus closing inventory divided by 2. Trade receivable turnover ratio. Credit revenue from operation divided by average trade receivable. Trade receivable means debtors plus bills receivable. In that case, provision for doubtful debts is not deducted. Average trade receivable opening debtors plus opening bills receivable plus bracket plus closing debtors plus closing bills receivable divided by 2. See working capital.